Hello everyone. Today's video is all about golden rules of accounting. So let us learn. Before going to the rules of accounting, first let us understand what is accounting. Accounting is used to give the information of money which comes in business and go out from the businesses. Or you can say accounting is a process of recording, classifying, and summarizing financial transactions in a significant manner and interpreting results. And account may be related to things which can be tangible as well as intangible. For example, land, building, furniture, etc. Now, there are three different types of accounts. First is personal accounts, second is real accounts, and the third is nominal account. Let us learn rules for all these three accounts one by one. So, first, let us understand what is personal account. These accounts types are related to persons. This person may be real entity like Raj's account, Rajesh's account, Suresh's account, etc. These persons can also be artificial persons like partnership firms, companies, body corporate, an association of persons, etc. For example, Rajesh and Suresh Trading Company, Charitable Trust, XYZ, Bank Limited, C Company Limited, etc. There can be personal representative accounts as well. Example, in the case of salary, when it is payable to employees, it is known how much amount is payable to each of the employees. But collectively, it is called as salary payable account. Rule for this account is debit the receiver, credit the giver. Let us understand example. Goods sold to Suresh. In this transaction, Suresh is a person, it's a personal account as being a natural person. His account will be debited in this entry as the receiver. Real account. These accounts type are related to assets or properties. These are further classified as tangible real account and intangible real account. What is a tangible real accounts? This includes assets that have physical existence and can be touched. For example, building account, cash account, stationery account, inventory account, etc. Intangible real accounts. These assets do not have any physical existence and cannot be touched. However, this can be measured in terms of money and have value. For example, goodwill, patent, copyright, trademark, etc. Rule for the real account is debit what comes into the business, credit what goes out of the business. Furniture purchased by an entity in cash. So here debit is what coming in. So furniture account is debit and the cash is going out. Cash account is credit. Nominal account. These accounts types are related to income or a gains and expenses or losses. For example, rent account, commission received, salary account, wages account, etc. And the rule is debit all expenses and losses of the business, credit the incomes and gains of the business. Salary paid to employees of the entity. Salary account will be debited when the expenses are incurred. So salary account is debit and the bank account is credit. Whereas when entity received any interest, discount, etc., these are credited whenever these are received by the entity. So rule for the nominal account is debit all expenses and losses, credit all incomes and gains of the businesses. All right, let us understand advantages of accounting. Maintenance of business records. It records all the financial transactions to the respective year systematically in the books of accounts. Second, preparation of financial statement. Financial statements like trading and the profit and loss account, balance sheet can be prepared easily if there is proper recording of business transaction. Comparison of results. It facilitates the comparisons of the financial results of one year with another year easily. Also, the management can analyze the systematic recording of all the financial transactions according to the policies of the entity. Next, helps in decision making. Decision making becomes easier for management if there is a proper recording of financial transactions. Accounting informations enable management to plan its future activities, make budgets, and coordinations of various activities in various departments. Accounting is an evidence in legal matter. The proper and the systematic records of the financial transactions act as evidence in further use. Accounting helps in taxation matters. Various tax authority like income tax, indirect taxes depends on the accounts maintained by the management for the settlement of taxation matter. Valuation of business. For a proper valuation of an entity's business, accounting information can be utilized. Thus, it helps in measuring the value of the entity by using the accounting information in the case of sale of the entity. Replacement of money. Proper recording of accounting transactions replaces the need to remember transactions. Thank you everyone for watching this video. We'll see you in the next video.